Town Bank Mortgage, NMLS number 512138, is an equal housing lender. This podcast is for informational purposes only. And now, the man born with a 5 o'clock shadow and with the NMLS number 2028-201. He is a gentleman. He is a scholar. He is
Tyler Crawley.
So yes, my Memorial Day break was a little bit longer than most, but we're back for the Thursday edition of Wilmington Mortgage. I am the aforementioned host of this podcast, Tyler Crawley, of course, loan officer, Town Bank Mortgage, right here, Wilmington, North Carolina, where we break down the top stories impacting mortgage rates every single weekday, unless, of course, I'm sick, on vacation, or it's the Azalea Festival week, which, by the way, it was neither of those things, and yet I still couldn't get a show together for Wednesday, which, a lot going on. But it's been, here's what's kind of funny about it is that it's been some pretty good news for the last couple of days with regards to rates. Nothing phenomenal, but we had a pretty good start to the week. So obviously we were off Monday for Memorial Day, and then Tuesday on the development progress of talks with Iran, we did see rates drop by about 8 or 9 basis points. And then even better was on Wednesday, rates continue to fall. Not a lot, 1 basis point, but the fact that you didn't see kind of a jump back is always pretty good. And now the 10-year is at the lowest level since, about the same with mortgage rates. Lowest level since the middle of May. So about May 15th. So not bad. It's still not great, but we're moving in the right direction. Like I said, that's true for the 10-year. And then Mortgage News Daily had the 30-year fixed rate index unchanged for Wednesday at 6.61%. So, and that's also the lowest level since mid-May. So some positive momentum going forward. So what happened on Wednesday? Well, there wasn't a lot, no major report, nothing really big going on. But we did get some global news that was not great and is not good, is what I'm trying to say. It's not good. So we got a report from the European Central Bank, their, the May Financial Stability Review from the ECB, European Central Bank. And they warned that the war in the Middle East and ongoing energy disruptions are creating growing risks for the global economy, which I think we all kind of get. ECB officials warned that the economic fallout remains highly uncertain, saying, quote, the current energy supply shock poses upside risk to inflation and downside risks to economic growth, said Luis de Guindos. He added that rising financial costs combined with weaker growth could increase market volatility and strain borrowers' ability to service debt. The ECB noted that markets may be underestimating the geopolitical and fiscal risks. While initial market disruptions following the Iran conflict faded quickly, the central bank warned equity valuations remain historically stretched and corporate bond spread remain unusually tight, noting that leaves markets vulnerable to a sharp repricing if sentiment deteriorates. The concern is especially acute for highly indebted European governments, and the ECB warned that additional fiscal spending in a difficult geopolitical environment could trigger renewed concerns over sovereign debt sustainability. So, they're basically, this is the European Central Bank. They're worried about the euro area and the economy over there. And, they're already having their own problems with the anemic growth that we have seen out of the euro area. But they're pointing out that this could compound the problem. And then not to mention, as bad as gas prices have been over here, if you look at what's happened in Europe, it's crazy. Way worse. They are far more impacted by the Strait of Hormuz than we are. So we're getting impacted, but they're getting much, much bigger impact. And so you can see why their concern has been elevated. Now, making matters worse is there was a piece today in the Wall Street Journal in which they're claiming that now one of the big concerns in Europe is Vladimir Putin I mean, what are we, 4 years into this war? And no real changes. I mean, people are dying. I mean, there's still battles going on. In fact, I think they even mentioned in the article that Russia's losing like 35,000 people a month. Is that what I saw? Yeah, Russian forces are losing 35,000 soldiers a month, according to Western intelligence estimates. And that's more than the Kremlin can recruit. But we're not really seeing any development. It's like there's no change. Like there's no ground being made up. Everyone's just sort of where they are, but the fighting is still going on. And to me, this is really more, I think, of a sign of desperation from Putin. Where, I mean, once again, we're 4 years into this war that he thought, would be over in a couple months, weeks maybe. And now we're 4 years into this, and now they're having recruiting problems and everything else. But so here's the growing fear. So Vladimir Putin, the fear in Europe is that he's going to try and reshuffle the cards by expanding the conflict to Europe. In recent weeks, Russia has made increasingly bellicose statements against the Baltic states, threatening to bomb, quote, decision-making centers in Latvia after accusing the country of hosting Ukrainian drone operators, an allegation denied by the Latvian authorities. Air raid alarms were sounded in Lithuania last week, forcing the government into a bunker after suspected Russian drones approached airspace from Belarus. The Russian Ministry of Defense, who has also published the addresses of companies allegedly working on drone production with Ukraine in 8 European nations, warning of unpredictable consequences and sharp escalation if military assistance to Kyiv doesn't cease. And then, of course, there's also this debate about NATO. Could Russia, by attacking, I think they've directly threatened the Baltic states. If we see a move by Russia, Article 5 of NATO, one country attacked, all countries are attacked. Could this force basically the U.S. to get involved? Like, would Putin want to do that? Like they're saying, I mean, to me, if he does go that route, to me, it's like a desperation act where it's like they know that they're losing and there's so much that has to go right for any of that to work out. So to me, if he did try and push things up, it would be more of a sign of desperation, not victory. And then, I guess he'd be hoping that Trump, who has, made comments about NATO in the past, would Trump maybe go, you know what, maybe we're not going to honor that. We're not getting involved. And then, I mean, at that point, NATO collapses, I guess. I mean, at that point, if the U.S. is like, yeah, we're not, I mean, obviously other European nations would definitely help, but it would end NATO as we know it. And so I guess, and I don't think Trump was going to do that. I want to make that very clear. I know Trump has been critical of NATO, but I mean, that's just so fundamental to the whole organization. I mean, that's it. That's what it's all about. It's about us uniting against Russia. So if Russia attacks one of the members of NATO and we do not respond, it's over. And I don't think Trump would do that. I mean, I know he talks tough. He does that a lot, but I don't think he would do that. And I can't imagine that Putin would want to do that. I mean, he would really have to have some inside intel that Trump really hates NATO and doesn't want to move forward. But so that's one of the other concerns. So, I mean, like, we already have the Middle East wreaking havoc on the European economy. If they were forced to then get into a war with Russia, I can't imagine that would be good for the economy. I mean, all those risks they're talking about would just quadruple. So, a lot going on in Europe. Not so much in the U.S. I mean, obviously we got things happening in the U.S., but nothing like what's happening in Europe. This didn't happen on Wednesday. It did happen on Tuesday, but I thought it was probably the biggest report of the week so far. And that was consumer confidence, always an important metric because at the end of last week, we got the Michigan survey, which was the lowest, I think, in recorded history. I mean, I think the report's been around since the 60s, maybe the 50s. Lowest level we've ever seen. But what's weird is we keep getting decent data from the Conference Board Consumer Confidence Report that gets a lot more attention. And now, mind you, I guess there's a little bit of a difference between consumer sentiment and consumer confidence. So the Michigan reports sentiment. This is confidence. So I guess there's a little difference. But we actually got a decent report in May with the Conference Board's Consumer Confidence Index dropping 0.7 points to 93.1. But that was upgraded. Not upgraded. What's the word I'm looking for? Revised. Upward. That's what upward, revised upward to 93.8 in April. So originally I think it was 90, I can't remember what, but they revised it to 93.8. So it almost seemed like we went up because we got that upward revision for the previous month. So even though it technically did fall, it did feel like an increase because they were projecting a lower number. The present situation index fell 3.2 points. So people still aren't feeling that great about, or feeling a little bit worse about the current situation. But the expectations index rose 1 point to 74.4. So still the present situation index still much higher, but a little bit of an improvement in the expectations index. Confidence improved among consumers aged 35 to 54, but weakened among both younger and older groups. Higher income households also continued showing stronger confidence trends on a 6-month basis. Dana Peterson of the Conference Board said inflation tied to the Iran conflict continues weighing on sentiment, saying that, quote, consumer confidence edged downward in May as the inflationary impacts of the war in the Middle East intensified. She did add that weaker views on current conditions were partly offset by a modest improvement in future expectations. So we are still seeing a decent level. Now, we want to be 100 and up. That's the magic number with the consumer confidence index. But we're in the ballpark. We're above 90. In fact, I think, 93.8. So the revised upward was the highest level in 7 months. And so the slight drop below that meant that May was the second highest level in 7 months. So an improvement is my point. But there's still this underlying idea in the economy. So it is very weird because there was a report today, or I think it was a couple of days ago in the Wall Street Journal, where it said, the stock market's just killing it. There's some very similar feelings to the dot-com bubble, rise. But the point is that people don't feel as good about the dot-com rise. So when the dot-com bubble happened, there was a little bit more optimism out there, and we're just not feeling that with this economy, with that consumer sentiment report last week. But then this consumer confidence report is saying that people are feeling better. So I'll let you decide. I mean, it's all personal. I used to say this all the time when I was on the radio, and people would be feeling bad about the economy, like inflation, right? Inflation's an issue, and politicians will be like, well, the price of this product is lower. And when you look at this product, like it only rose 10%. And for the past 3 years, it had risen 20%. And so it's actually like, you cannot convince someone that the economy is good if they don't feel like it's good. Like if they lose their job or they lost their job or they're underemployed or they're not making, and you're like, no, actually things are not that bad for you. You're like, go pound sand. They feel bad. So it's one of the hardest things for politicians. You can't do it. Don't even try. Trying is almost worse. Just admit that, okay, you feel bad about the economy. I'm going to try and change that for you. But to be like, I don't know, things actually are not that bad. It's never going to work out. You cannot convince someone that their economy is great. What they're feeling is great. So don't even try. But speaking of try, that was a good show. I think we're done. We're done for the day. All right. We got a lot going on tomorrow, actually. I forgot to double check, but there's a ton. I think we're getting durable goods. I think we got inflation data, PCE, so Fed's preferred inflation gauge. I think we got second estimate for GDP, jobless claims, new home sales. It's a lot. That's the top of my head. I'm not even looking at it. That was the top of my head. I didn't look at anything. I remember everything that was coming out today. Did I say tomorrow? I meant today. All right, you guys enjoy your Thursday. We'll be back here Friday for the final edition. Well, for the week, not like ever. Second Second show of the week, the last one of the week. The Friday edition of Wilmington Mortgage. Remember, as always, do not wait to buy real estate. To buy real estate and wait.